Hi guys, Ryan here again with Trading Pass Pro, and we're here to give you the tools to become consistently profitable. So today's the next video on, and we're just going to dive into a bit more depth on what are EAs, how the EAs work, how we actually get to that 2 to 4% a month, which is the golden figure, and how that can shape up over time, scaled up, and then look into a bit more depth. So, firstly, obviously, the EAs, they're a tool that runs automatically on MT5, and what it does, it's the brains behind the trading. So, the EAs will run 24 hours a day, 5 days a week while the markets are open, with settings that we feed them to make the best possible outcome. So, the tool itself does one thing, but feeding the settings is another thing. So the backtest process is a massive 50% of the working. So the way a backtest will work is you can backtest the EA to run on, let's say, the last 12 months of market data. So what the process will do is go through about 11,000 different combinations of settings for the bot, and it will pick out the best combination with the most profit and the least drawdown over the last 12 months. So every month, if you re-optimize that, that's giving you an idea of the profits you can expect, the sort of drawdowns you can expect, and it gives you that confidence. If you can see if that EA with those exact set files have traded for the last 12 months, this is the exact amount of profit it would have earned over the next 12 months. So you think, actually, I've got confidence for that moving forward now for the next month, to know that you've got nothing to worry about, you should be fine, and then at the end of that month you'd re-optimize it again to take into account the last month's worth of market data. So once you obviously naturally get into that cycle, it's something that you just get into routine of once a month re-optimizing, and do it. Obviously, what I'm trying to provide, hopefully to you guys through this process, is me even doing that hard work for you, me doing the optimizations, me making an EA fit to your risk appetite or how you want it to run. But then at the same time, like I say, putting the education plan in place. So when you decide, actually, I've had enough of paying Ryan to do this, I want to do it myself, you can jump on the training plan, learn how to do it yourself, and at that point you'll be free to have your own EAs and produce your own money, I suppose. So my sort of strategies work in three different ways. I can either have them running with the trend, so if the trend's going up, I can have the EA so it will only place trades in buy positions running long. Same if the market's going down, you can sell short. I can have it in a ranging market, so if the market's just bouncing up and down and not making any big moves, it can take those small wins between the brackets of the ranging market, and also reverse trend, so it can work against the trend. So if there's a reversal coming up, or it can, if the trend's generally like a long trend, it can see a short position and it'll take it and reverse the trend. So they're the three different ways. I can run them separately, I can run them together, but combined, all three of those running on the same account covers all market conditions, which really leaves a point of, if one strategy is not doing so well, the other two are picking up the slack and still bringing that money in. So within one account, aiming for that 2 to 4% a month is more of a case of splitting that down. Let's say you have 6 different EAs running within that one account. So that one account, each EA will only need to make 0.5% profit to get you 3% profit. So really, it's a way of, again, of breaking it down to a smaller lump, making that a consistent income, putting those 6 together, suddenly you've got your 3%. So it grows like that, and obviously just aiming for 2, 3, 4, 5% a month, because you're not aiming for the big figures, your drawdown is going to stay at a point where it's well within prop firm drawdown rules. It's well within like your own psychological rules of thinking I've lost too much money. And 99% of the time, because the drawdowns are that low, when it does drop into drawdown, it will easily recover and just get straight back out of that drawdown again. So it all comes back to the sustainability point of things. There's a lot of traders out there who will go and make silly amounts of money in 2 months with beginner's luck, and then suddenly after that you just don't hear anything from them because it's not sustainable. Earning between 2 and 5% or 2 and 4% a month is just a sustainable level to be at. Your risk is at a nice risk level, and it comes back to that golden thing. You've got a 200k account, 2 to 4% a month, $4,000 to $8,000. You can get as many of them as you want. There is no limit to that. And if you start then taking that out of the equation, taking your withdrawals, putting into your own pot of funds, before you know it, you're growing that account to a point within whatever level you want. There is no lid on it. There's no ceiling to say this is where you need to stop trading. It just grows and grows as you want it to grow. So the EA is part of the tool. Obviously, it's a great bit of kit. It does things that humans we can't. You wake up in the morning, it's produced money. A lot of the crap you see on Instagram, Facebook, where people are saying copy our trades, yeah, it'll work for a month, it'll work for 2 months. Suddenly you'll never hear from them again, because these people who are using these copy trading services, what they're doing is copying somebody else's bot, and all that's doing is got a predetermined set files with it. You can't change that. Nobody's actually re-optimizing those set files. It's not adapting to market moves. It's not adapting to the market data. It is literally just hoping for the best. And the frustrating thing is, people rave about, you see everybody's Instagram stories full of, oh, I've made 30 quid today and I've not lifted a finger. Well, yeah, that's fair enough. You haven't. But then suddenly when you don't hear from them anymore, or it drops off the face of the earth because whoever they've bought this system from or they're paying a profit share from, they don't know how to change it. They don't know how to adapt it. They don't know how to optimize the results. So it's consistent. It'll be there year on year on year. So anyway, part of my next video is I'm going to start a series where I'm going to take you guys with me. Start at the 200k account, like I say. I'm going to buy the 200k account, get it passed, optimize those set files on there, and then with that 200k account, I'm going to grow that over the next few months up to $1 million in funding. You'll see the wins, you'll see the losses, you'll see it do well, you'll see me probably looking at the screen thinking what's gone wrong, but it's just, I want to let you guys in on the journey, see how it actually starts, the process through it, and where it can get to. So that'll be a new series coming soon. I'll get that started, get the first video of that uploaded as well, and then on the next video I'll talk more about trading journey, what you can expect for people who have never traded before. Thanks again guys, and speak to you soon.